All right. So hopefully you guys can hear me. So good morning. Today is July the 5th. First day back from vacation. So I'm still adjusting to the charts. But so as usual, analysis for US 30, gold and EU. So this morning I sent out an analysis for US 30, and nowadays literally all I do is use our indicators to trade. So I checked the entry I was curious about, which was yesterday, was using the crosses indicator. So if you're using the crosses indicator and you went to the 15-minute time frame, I turned off the buys because I wasn't interested in the buys, but let me just turn them back on. So I did mention with this indicator, of course, where are the requirements for this thing? Give me 1 second. Text. See if I can reproduce this. Crosses. Okay, there you go. Reset chart view. Go ahead and bring this. All right. So yesterday, I noticed that since this golden cross showed up and we've had what 1, 2, 3, 4, 5, 6, 7, about maybe 15 buys. But with this strategy, right, take the first 3 or 4 trades, including the original cross. So if you took 1, 2, 3, 4, the first 4 buys, you would have already hit TP on all of them. So at that point, and yesterday, right, the reason I turned off the buys, I did mention, once you start seeing the EMAs coming back together, do not take those. Like here, all of these buys right here were red flags. So these were not buys you should have taken at any moment, because these were red flags. Because at this point, the 9 EMA was coming back towards the 200 EMA, which means a death cross was forming on US 30. So for me, literally, I was waiting for this sell on US 30. And when that sell did show up sometime around 5 a.m. or 4 a.m. Eastern time, I went ahead and entered it. I did not enter it on that particular candle because I got a bit late, but US 30 retraced up a bit and I went ahead and entered it. So I'm still in this trade. I did a 200 pip stop loss and TP. I'm still playing around with that. Ideally, I should use a 100 pip TP and stop loss for US 30, but sometimes 100 pips is nothing for US 30 and can easily get faked out. The other thing that I use the Confluence for this particular trade, if you use the breakout scanner, you can see we broke out for a sell to the downside. So this was my other Confluence right here. So the breakout scanner has like what, like a 80% win rate. The crosses indicator has like a 90 to 98% win rate. So just by these two indicators giving me a sell at the same time or around the same entry, I knew that this trade had a like a 95 probability to hit. The other thing I looked at was where was US 30 at that point. So the entry was somewhere around 34,333. So 34,333 was somewhere here. Yeah, so somewhere around here. So at that place, right, what do we have? We have a 15-minute bearish high and low, 15-minute bullish high and low. So as I said last time, right, if you see two opposing order blocks, they automatically cancel out. So you can come in here using the markups indicator, right, and turn off those ones that are conflicting if you don't want them on your chart. So if I turn off the 15-minute OBs, they go ahead and disappear. What else do we have? We have a 30-minute bearish high and low and 30-minute bullish high and low. Go ahead and turn that off just to clean out your charts if you want that. So at that point, what are we left with? Hourly bearish high, hourly bearish low. We also do have an hourly bullish high and low here. So you can go ahead, right, and take those off. But right, the area that I took the sell, where was price at, right? So price was at this, because I said 34,333. So price was at an hourly bearish high and low. So at this point, as much as we have two conflicting, so remember, I'm looking at where is price at. So at this point, if I do the replay, price was, we've seen 34,333, right? So I'll go ahead and do that. we had that hourly, let's see if this markups load. Okay, we had this hourly bearish high and low. So we know the next hourly bullish high and low where price can reject from is all the way down here. So at this point, I'm not even concerned about the hourly bullish high and low for now, because I know price is closer to the bearish high and low. So at that point, I go ahead and turn on my zones. So since I was looking for a sell, what I wanted to see here were these red zones right here. So at this point, I knew that we had sellers sitting up here. So that's all I needed to know. And then at that point, I went ahead and entered that sell on US 30. And it went down like 150, no, 120 pips. We had this retracement, but of course I was expecting this retracement around the hourly bullish high and low. So remember, price is almost always gonna reject from these order blocks at some point. But what do you see below the hourly bullish high and low? As much as even right now where we are at, we have some buyers sitting here, yes, and we do have an hourly bullish order block. But what do you see down here? You see a 4-hour bearish high and low. So to me, a high time frame order block will always override a lower time frame order block. So as much as I know we have an hourly bullish high and low here, I know that if price does close below this hourly bullish low and close below this 4-hour bearish high, these sellers that have been driving price down from all the way up here will get another order block to pump price all the way to the bottom. So I'm still expecting US 30 to come and reject from this trend line on the hourly, if that makes sense. So my first analysis, actually, even before looking for this particular entries, actually my first entry was based off of the crosses, because I did see that we were overdue for a death cross on the 15-minute. But also when I looked at the 1-hour time frame on US 30, right, I drew my trend line. So I drew this trend line from this lower low through this high low to this lower low to this high low. So I do expect, and this is a static trend line. So we do have this trend line to the bottom and trend line to the upside. So that's why I entered that trade for US 30 sell. I'm still in that trade. I'm going to hold it regardless if it hits stop loss or TP. What I might consider in the future is maybe doing 100 pip TP and stop loss, but this trade for me has like a 95% probability of hitting. Gold, on the other hand, this is what I was expecting on gold. So when you draw a trend line, so I drew this trend line when I saw gold coming down here, I drew this trend line last night when I saw this lower high formed. So when I see this lower high formed, I figured that gold had started a move to the downside and probably is not going to go and touch this trend line. So yesterday I had this trend line to the upside and trend line to the downside. And nowadays I only draw trend lines on the hourly, so that I don't have to keep drawing them on the 5-minute. The 5-minute ones also still stick, but I just don't. And nowadays I'm trying to reduce the amount of time I'm in front of the charts. So I drew this trend line yesterday, and when I woke up today, price had gone pretty much right, came to the trend line. This is what you want to see when price comes to a trend line. You want to see price sticking to that trend line and rejecting from it. So what do you want to see on an hourly trend line for you to get an entry? You want to see closure below or closure above, and then you want to see retests and closure below or above, depending on the direction that you're trading. So when I looked at gold this morning, it had broken this static trend line to the downside. Keep in mind, if gold was supposed to go up, it would have come and rejected from this upper trend line, right? From this lower high to this higher high to this higher high. But when gold formed this lower high, it said, hey, I don't have enough buyers to push me up to retest this static trend line to the top. So because when you see lower highs, it means a downtrend has started. So that's why I drew this arrow on gold, because for me, I'm expecting gold to drop. So now the other thing, you don't want to trade around this price action. So you see how the hourly candles are just sticking to this trend line. So what they're trying to do here, they're trying to trap both buyers and sellers. So if in doubt, like for me, I didn't enter this sell on gold because I was in a sell on US 30 and I'm also in a heavy sell on GJ. So and I don't like trading when price is sticking to a static trend line. In any case, what I want to see here, I do want to see this manipulation. And then I know in future, if price ever comes to this trend line, I know that this is going to be a static trend line. So let's say gold drops down heavy from this trend line and we get a buy entry somewhere down here. So if we were to do that, guess what I would look at? I would look at this static trend line that was tested a lot of times, and then that's where my TP would be. So instead of risking my leverage, just trying to play the game here, I'll just wait. I know my bias is to the bottom, but right, I'm already, right now the trades I'm in there, I'm probably up or risking 4% or something, or up 4%, but I don't want to trade more trades. So now for this particular trade, an entry would be waiting for closure below the 9 EMA. So if you ever get a instance like this, where a trend line is being magnetized and price is just rejecting above and below. And remember, this is the hourly time frame. And for you to trade a trend line on the hourly time frame, you need to wait for closure above and then read above or below, and then retest and closure above or below, depending on the direction you're taking. So that is to tell you that if you're trading an hourly trend line, it might take you between 2 hours to get an entry. So for this, if we keep replaying this, what do you see? This hourly trend line that we are literally in, what did they do? They literally took price, right? As you faked all these buyers up, because they tried to trap buyers up here, showing them that, hey, and this is why it's important for you to always wait for a candle to close. So they took gold all the way up, right, during New York Open, but guess what? Brought gold all the way back down. Now, for me to, if I was to enter a sell on gold right now, so look at the arrow that I drew previously, and I sent this in the Discord in the commodities channel. So look at when I sent that arrow, right? So that's what I was expecting on gold. So right now, what did I tell you guys, right? If you ever get an instance like this, and we've gotten it a lot of times, wait for, if your bias is for a sell and you see price just faking out and manipulating people against your trend line, do not try to catch that trade. If your bias is for a sell, say, okay, my bias is for a sell, but because I don't want to get faked out, I'm going to wait for price to close below the 9 EMA. And again, since this is an hourly trend line, the next entry we could have on gold, so it looks like we have 5 minutes before this hourly candle closes below the 9 EMA. So remember, what we want to see right now is this. We want to see this candle close below the 9 EMA. Then we want to see the next hourly candle retest the 9 EMA and close below. Then and only then can you sell gold and take right gold to the downside. So that's the only time that I would look for sells on gold. Also, look at what they did right here. We had an gold came down. We have an hourly bullish high here. Look at how far up they took it, all the way up, exactly to what do we have here? 4-hour bearish high. And if I turn on the zones indicator, what do you see? It shows you there's sellers up there. So gold, there's no way gold was going anywhere above this zone. So that's how you just analyze. So for me, I use the zones indicator to tell me where are buyers, and I never use the zones indicator to enter any trade. I just want to see where are buyers and sellers. So for here, I know that we have sellers around 1935. Okay, that's not enough. You know, I'll never enter any trade based off of the zones indicator. What you want to do is, if we have sellers here, what other confluences can you use? So we have sellers here. Okay, then you turn off the zones indicator. Use the markups indicator. We have a 4-hour bearish high here. So if sellers are to take price down here, they're going to use the 4-hour bearish high. If we did not have this 4-hour bearish high here, gold would have skyrocketed and went up, picked up liquidity around this 4-hour bullish high and low probably, and shot up. But you do see we have a daily bearish low. But let's assume that we didn't have this 4-hour bearish high. We didn't have this daily bearish low here, and we just had the 4-hour bullish high, and we also had a bunch of sellers up there, right? You know what they would have done? They would have skyrocketed gold, stopped out all of those sellers, because the sellers wouldn't have had a 4-hour or any bearish order blocks, and taken price all the way up. So that's how you never want to use the zones indicator by itself to enter any buys or sells. Let the zones indicator tell you we have buyers here, we have sellers here, and then use your other confluences to see how can you write price up or down using that information you have right there. So gold, the next entry for gold would be like an hour from now. I'm not gonna chase anything. I'm just gonna let gold do its thing. EU, I really haven't traded EU in a minute, but you can see we are stuck in a bunch of consolidation. So I don't even want to trade this. EU hourly bullish high. Yeah, EU is just a bunch of consolidation. So I'm not even looking to trade EU. But other than that, right, this is your chance for you guys to ask any questions you have. I know we haven't had a live session in a minute, so let me know any questions you guys have. The other thing for US 30, if US 30 comes back in here and closes below the 4-hour bearish high on the 5-minute, and retest and closes below, that's another opportunity to scale into US 30 for a sell. But for me, US 30 is a sell for the next, I don't know, right now, right, I'll always look at my highly probable indicator. So I'm anticipating another sell to fire any moment from now. But for me, US 30 is a sell for the near.
Saying for confirmation to sell?
I'm sorry, for what, the next sell or which sell?
For US 30, you said retest the 9 EMA and then close. What did you say again?
Around the 4-hour bearish high, 4-hour bearish high. If on the 5-minute we close below the 4-hour bearish high and then retest and close below, that would be a sell for US 30. Because at that point they will take off this. So right now this hourly bullish high and low has already been used. So if US 30 does not go up from here, that's it. If US 30 comes back down and closes below this 4-hour, I'm sorry, this hourly bullish high and low, and then closes, so this is what you want to see for a sell on US 30. So US 30, this is what I expect. I expect them to come back down here, have some rejection. This is the last line of support for US 30 for now, and then probably do this, close below, retest, and then close below the 4-hour bearish high, retest the 4-hour bearish high and close below. At that point, US 30 will free fall, probably till FOMC. So this is what I expect to happen for US 30. And that's the next best sell for US 30 around this 4-hour bearish high and low. And if you turn on the zones indicator, if they bring US 30 back here, it means they will take off all these buyers right here. So even for me, like, these are not strong buyers, right? Because the buyers are so much spread out. So you have buyers here, and then you have this major gap. So you can see, right? So always ask yourself, where is price likely to head? So we know we have buyers somewhere down here, but they're so spread out. So for me, that's nothing. I go ahead and turn the zones off. So if I'm looking to buy US 30, to be honest with you, I would look at where is US 30 likely to go? Where's the next high level area of liquidity? This zone right here. Excuse me. Where we have a 4-hour bullish high and low, and we have a daily bullish high. This is the next 33,760 area. That's the next area I would be looking to buy US 30. And that's all the way down here. So that would mean US 30 would need to break this trend line. Either way, like, I'll be out of my trade and I'll have made like 1%, because I think I'm in this US 30 sell with 1% risk. Yeah, but I'm sorry. Yeah, but that's the trade I'd be looking to take on US 30. If we get it on the live session, then yes, we can take it, but I'm not sure. We'll see if US 30 will drop that far from now.
I got a question for I know we don't trade Bitcoin much, but you use the same trade manager I use. What's your what do you put for like 50 pips on Bitcoin?
To be honest with you, I haven't used the trade manager on Bitcoin, but so what I know for the trade manager, are you using FTMO?
Yeah.
Okay, FTMO, so let me try and remember this. That's US 30. So for FTMO, US 30 is in the thousands, meaning US 30 is in the 10,000s. So meaning a 100 pip move, you'd put 10,000. FX pairs, is it 10,000? So like for FX pairs, I know like you would, if you're doing a 200 pip stop loss, unless I haven't traded this in a minute. But anyway, you see the trade manager, you have the options, like you have the little circles up there. Like the third, let me go ahead and give me 1 second. Let me see which one it is. Because there's one that can draw the levels for you. Maybe it's the second one. No, it's not the second. It's the first circle, right? You see the trade manager, the first circle. If you go ahead and hit that and activate it so that it's green and click anywhere on the chart, it's going to draw for you the TP and stop loss based off of the values you've put in the stop loss and TP boxes.
Oh, okay, I see.
So, yeah, so that way you can adjust. Yeah, so for here, Bitcoin, the reason I expect Bitcoin to go to 42,000. So let me turn off a bunch of this. So Bitcoin. And actually Bitcoin, I wouldn't be trading Bitcoin. I wouldn't be looking at Bitcoin like 15 minutes, 30 minutes. So Bitcoin, I'm only interested in 1 hour going up. So I'll go ahead and turn everything off. And right here, if I turn on the zones, you can see this is the next area of sellers for Bitcoin, right? 33,813. Now, for me, actually, to be honest with you guys, I was looking for a reversal to the downside because you can see we have structure right here. So we have this move, consolidation right here, right? So we would expect structure to be completed to the downside. However, the reason I'm looking, and that is too obvious, right? But the reason I'm looking for continuation to the upside, let's start eliminating all order blocks that are next to each other, right? So we have an hourly bullish high and low here. The hourly is down here. Okay, so that's fine. We can leave them because they're so far apart. Daily bullish high and low, daily bearish high and low. So the daily order blocks, as much as they're high order blocks, they're close to each other. So for now, let's take off the dailies right there because they cancel each other out. They're so close to each other. All right. So if you take those off, what are you left with? We have that hourly right here. The next hourly bearish is all the way down here. So we can leave both of them on the chart. Here and this is on the 4-hour time frame that I'm on. What do we have here? We have a weekly bullish low at 31,028 area. So other than, and here we have sellers, right? So we never trade, or personally, I never look for sells based on knowing that there's sells or buys based on knowing that we have sellers or buyers there. Now, I know we have sellers at around between 32,300 and 31,500. We do have sellers up there. Now, if we did have a weekly or daily bearish low or high here, then I would say yes, we can look for sells on Bitcoin. But here we have sellers here, but we have a weekly bullish low here. As much as the weekly bullish low does not have any buyers for now to take price all the way up, for me, I value order blocks. I put order blocks higher than the zones because for me, this could be retail sellers right here. And I really don't want to trade in the direction of retail traders. Now, for me, I do expect Bitcoin to come back up here. And you can see it tested this weekly bullish low area, right? Because you can see it closed above here, closed back below, closed above, retested and closed above, but right, they brought price down. So what this tells you is that this area right here, 31,042, ideally call it 31,000 area, which is a psychological level. We have a weekly bullish low. Now, the other thing I know about retail traders, because I used to trade like them, at around psychological levels, like in the thousands or hundreds, you expect a lot of people, right, try to sell from there. And right, they made from 31,000, they've made about what, to 29,800, right? So some smart sellers, knowing when to exit, they made a bunch of money selling this. But for me, what I expect Bitcoin to come here, pick up liquidity from this weekly bullish low and fake out all these sellers. So it's gonna take off all these sellers. And if you scroll up, guess what happens when it comes here? We have a weekly bullish high. So when it gets here, expect a sharp manipulation to the downside. To the downside, let me get another one of this. To the downside and then above and then shoot up, right? So when is the next area do you see any sellers? So here, what do we have? We have a weekly bearish low around 41,000 area. Again, a psychological level, 41,200 area. Okay, we have sellers there. We don't have buyers. We don't have any bullish order block. So here, yes, we have sellers right here, and they have a weekly bearish low. And also above at 47,000 area, 48,000, we have a weekly bearish high and we have sellers sitting here. So to me, this is institutions right here. These are smart money traders right here, or banks, hedge funds. So at this point, this is where I would expect a sharp retracement to Bitcoin back to wherever it's gonna go. But for now, I do expect them to at some point push Bitcoin all the way up here. So yeah, and initially, like last week, since I didn't have access to my computer and I was just trading on my phone, I was just looking at this structure and expected Bitcoin to retrace down. But right now, to be honest, I'm looking at continuation to the upside. On the other hand, not to say that it has to go, like Bitcoin can easily, right? They can bring it back down and complete structure, but the probability of that happening is knowing that what we know now with these order blocks and not really any order blocks for sellers to use to bring price back down. I do expect them to push price up above. Also, the other thing, what we have here, if you look at this, I don't know if you guys have read about it or have seen this pattern before. This is a bullish flag pattern. I don't know if we have any flag emojis, but a bullish flag pattern, excuse me. Let me try and draw it using this. A bullish flag pattern. Let me go somewhere there's an emptiness. Okay, so this is what a bullish flag pattern looks like. So it's literally like a flag. So that's what's called a bullish flag pattern. So when you see this, such a pattern, price, right? Sometimes price rejects to the downside, right? Because ideally this is structure, but this does not always have to happen. So this is why sometimes you also have to look at other confluences. So this ideally is a bullish flag pattern. And if you're not careful, and you try to sell and you don't have any confluences for a sell, what normally happens is this. So, and that's why it's called a bullish flag pattern. And on the other hand, a bearish flag pattern is if this was inverted and you had the flag part facing down, and then it continues to the downside. So this right here, this is the pole of the flag, and this right here, this consolidation, that right there is the flag. So for me, I'm expecting Bitcoin to shoot up in the coming days. So maybe they're gonna wait till FOMC. Yeah. So US30 definitely coming back down. For me, I'm not gonna re-enter until it gets back there. Again, I'm still in this trades for US30. Oh, again, there's another thing I want to show you guys. Yeah, so for me, I'm still in this trade, also based off of this breakout entry. The other thing I wanted to show you guys, I know the reversal, where's that reversal chart? I know the reversal on US30, we don't get a 5-minute reversal entry on US30 every day. The 5-minute reversal entries we get on US30 are normally before heavy news days like FOMC or NFP, or after heavy news days. But I just realized we can be looking for reversals on US30 on the hourly time frame. Like for example, here, this was a reversal entry on US30 on the hourly time frame. So in some of these instruments like US30, Bitcoin, even GJ, instead of starting, so I know for me, the gold, FX pairs and gold and FX pairs, and previously US 30, I normally start looking for a reversal on the 5-minute time frame. But because US 30 moves so erratically, normally we won't get an entry on the 5-minute, same as GJ. So I was just doing some back testing this morning, and I realized we can be looking for reversals on US 30 on the hourly time frame. Like during, if like if we don't have heavy news days, right? So for example, here, what we would have here is the no, that's a trend line. I don't want that. What we have here is horizontal ray. So I'm looking for an even number. So 33,800 area. So this would be area of interest. So everything, right? Nothing changes. Like the way you mark up charts doesn't change. You'd literally mark it up the way you'd mark it up on the, like if you got stopped out on the 5-minute, 15, 30, all the way to the hourly. So you have your area of interest. So you want to look at the last time US 30 consolidated before starting a trend. So for me here, I can see that this is a trend arrow right here. So when US 30 broke above here, it trended up here, right? Because price stayed consistently above the 9 EMA. The other thing you want to do right here, right? Of course, do your threshold. The threshold for US 30 using the manual markup is 500 pips. So this is 33, about 33,800, 500 pips. Above that is about 34,300 area, right? So 34,300, right about there. So you mark this up as 500 pips, right? The basis does not change. So during this trend to the upside, what you don't want to see is price consistently closing below the 9 EMA within this 500 pips. So just one candle, right? The what is it called? The requirements don't change. Just one candle closing below the 9 EMA does not invalidate this 500 pips. What you don't want to see is more than one candle closing below. In this case, since we are looking for a sell, what you don't want to see is more than one candle closing below the 9 EMA consistently. But just one candle closing below, that's fine. So here, the trend started up here. You have 500 pips here. You come in here. So you're only interested in sell. And since you're using the hourly time frame, which is a higher time frame, this should be 0 right here. The reason for that, if you put it at 1, what 1 does, 1 will wait for a break and retest. And since this is the hourly time frame, if you wait for a break and retest, that means your entry could come like after 2 hours. And knowing US 30 can be like 50% towards where your TP would have been if you did 1 here. So you only want to do 1 here if you're using like the 5-minute and the 15-minute time frames. But if you're using like the 30-minute and above, this one you want to do 0 because you want the earliest entry right there. So right here, and you're only interested in sells, you're not interested in buys, so you go ahead and turn off the buys. Breakout pips for US 30 and gold, this is 50. For FX pairs, this is 20. This one, of course, you don't change. Source should be closed. You can play around with the fast MA, but if in doubt, just leave it as at close. Okay, so right now you wouldn't have taken this sell because this sell is within this 500 pip threshold. So US 30 came all the way up here, and then it gave you that entry for the sell right here. So at this point, from your area of interest, price has consistently stayed above the 9 EMA on the hourly time frame for 500 pips. So this was a valid entry also for a sell on US 30 right there. Right, and this one would have come close to TP. So that's how you can find entries even using the reversal. So on Bitcoin and like US 30, we can start looking for reversals on the 1 hour, like during days when we don't have news. So that's another way you can use this. Any questions? All right, now if this was GJ, let me show you what I mean for GJ also. GBP, JPY. Let's see. Now for GJ, we don't have as much as we have an uptrend here, this is what we don't want. We don't want like this candle closures, multiple candle closures below the 9 EMA. So for here, there's really no reversal that I can feel comfortable taking. So if I go here, like I can literally, I know GJ has been trending up for a while. Now I can go on the 4 hour, but you can also see even on the 4 hour, we really don't have like a clean stay above the 9 EMA other than here. This was the only time like at the 4 hour. So when I say like, once you see a trend, like you'll be able to identify. So to me, this is a very nice and clean trend because price stayed consistently above the 9 EMA. So for me, if I was taking this sell on GJ, if I was taking this sell on GJ, so this was a valid sell, I would have taken that sell here. Normally for me, GJ, I do like a 200 pip TP and stop loss because GJ moves heavier than other FX pairs. Excuse me. And this trade, I didn't take it, but could I, this trade I could have gotten stopped out. So same thing, right? If you get stopped out of one time frame, don't try to re-enter on the same time frame. So for me right now on GJ, I would be looking at the daily time frame to look for an entry for a sell. So, oh, actually, wait, this should be 20 since this is an FX pair. Yep. So right now on GJ, I would be looking for a daily entry on GJ since if I took the sell on the 4 hour, which I didn't, but I would have right now I would be looking at the sell on the daily time frame. Any other questions from anyone? All right. So for gold, this is the candle. This hourly candle is now what we are looking for. This hourly candle that closes at 41 in 41 minutes. So if we look at where price is at for gold, what do we have? We have an hourly bullish high and low 15-minute bullish order block, 30-minute bullish order block. So we don't have any bearish order block here other than this 4-hour bearish high and low. That's all the way above here. And if we turn on the zones indicator, the sellers are all the way up here. So what I anticipate for gold, if they have to pump price to close below here, they have to pick up liquidity from somewhere. So the next area they can pick up liquidity from is this 4-hour bearish low around 1930 area. So 1930 would have to be retest of this trend line again. So which would mean, right, we might have to wait like a couple of hours before we get this sell on gold. Because right now, we just have a bunch of buyers sitting here. So I wouldn't even be trading gold. There's just two. Wait, give me 1 second. We do have a death cross right here. Let me do this. We have a death cross forming on gold. So we had this buys, all of this buys, and you can see the 9 EMA is coming back towards the 200 EMA. So we do have a death cross, potential death cross forming on gold at around 19. It would be maybe 19, 20, 21 area, 20 area. So let's see what's there. So 1920, 1921 area. Go back here. Reset this. This is gonna load. Did I break it? Okay, there it is. 19, 20, 21. So if a death cross forms on gold using this crosses indicator, that will be somewhere below here, 1920, 1921 area, where we have a 30-minute bullish high and low and a 15-minute bullish order block. see. So for me, gold right now, I'm conflicted on gold. I'm still expecting it to go down, but for me to enter any sell on gold, I need to see what everything else is telling me. So let me see the breakout scanner. Okay. So the crosses indicator telling me that possible sell is coming on gold. The breakout scanner is telling me possible sell coming on gold. The only red flag on gold as of now, based on where gold is this bullish order blocks. So I would still have to wait for this closure of the current candle. Overall, my bias is still a sell for gold. The only red flag is this bullish order blocks that we have down here. But again, right, my two top indicators tell me that we have a sell coming in. So now this sell on gold, I would give it probably a 70% probability of going to TP. But if it does come down, right, if we do break below this hourly and 30-minute and 15-minute OBs, you can see we have nothing. So this is no man's land down here. So we don't have anything between 1919 and 1909. So which means gold can, from 1919 to 1909, if we do get that sell, gold can easily free fall all the way to 1909, possibly pick up sell liquidity even more and fall. Yeah, if gold breaks 1908, we are going. Yeah, this can be a heavy drop if gold breaks that. But anyway, we just have to wait for this hourly closure, and then that's the only time we can have an entry. Anybody else have any questions? All right. Yeah. So nothing. If I do get that sell on gold, I'll send it in the Discord. But for now, there's no other need for us to remain on the call unless anybody has any other questions.
Yeah, but can I just ask one thing?
Mhm.
Yeah, so when you were saying the 150 pip threshold, yeah, so when we got the reversal the other day, I think you went from like all the way to 1930. So that's about what, 200 pips from 1910, I think. So if it trends up for a long time and then the threshold has been met, we expect it to drop for, like, we expect it to reverse for another 150 in the opposite direction. So it hasn't done that yet. So that means,
So
yeah,
a reversal. So remember, if it reverses for the same amount of pips, sure, it can, or it can even go more than that, or it can even just reverse for 50 and keep pumping up. What you always want to look out for is how do I put it? Okay, let me put it this way, and I know I've mentioned it before. If price always moves the same amount of pips, we would always have a sideways market, right? So you want to look for what TP works for you based on your risk to reward. So if it reverses for 150 pips, for me, the TP on gold is normally 100 pips. So I don't care if it reverses for 300 pips. I've already banked my maybe 1% or 2%, and that's it. So if you enter any trade, like for me nowadays, when I enter a trade, the first thing I know I have a maybe 200 pip, or maybe like for US30, right? US30, my TP is 200 pips, right? I think I changed that. My TP for the trade I'm in for US30 is 200 pips. So where's 200 pips from this entry? Is somewhere around 34, 130. Now I'm looking at the 200 DMA or 9 EMA, because remember on the 1 hour time frame. So if my TP is so far, so give me 1 second, guys. I gotta get something at the door. All right, I'm back. So for me, I always look at if where my TP is relative to the direction I'm going. So if right here my TP is I think 34,130. Now I'm expecting US 30 to come and retest this trend line. Now, if my TP was somewhere down here, this is not something I want, because what do I expect? I expect if US 30 touches around 34,121, US 30 might reverse to the upside and my TP might not hit, right? Because for me nowadays, the way I trade, it's either TP or stop loss, like no in between for me. The other thing I want to be cautious of is this 200 EMA right here. So when you're setting your TP and stop loss, also look at the hourly time frame. Look at the hourly time frame and see where is the 9 EMA or the 200 EMA, depending on what direction you're trading, or where is your trend line, also depending on the direction you're trading on the hourly. And if your TP is so far, like in this case, if it's a sell and your TP is so far below the 200 DMA and the trend line, then maybe you need to adjust your TP and stop loss, because right here, if US 30 comes down here, you will expect a rejection from the 200 DMA. So it doesn't matter, like don't focus really on the catching a bigger move. No, just focus on, okay, you've got your entry. What is the optimal TP and stop loss that can make your trade hit or lose? So you don't want too small of a TP or too small of a stop loss, and you don't want too large of a TP and stop loss unless you're a swing trader. So you want to have that in between. Like the other day, I had like a 500 pip TP on US 30, which hit after like 5 days. So the question is, right, how much are you willing to hold a trade? Do you if you want to hold a trade for like 10 minutes, then maybe a 200 pip TP is not for you. If you're willing to hold a trade for a week, then maybe a 500 pip TP is good for you, if that makes sense.
Yeah, but let's just say, I understand that, but when you said that threshold, that 150 threshold, for example, on gold,
Mhm.
so I was looking at it for the whole, like the past month, and then, like every time it goes, if it does, like, let's just say 300, to the top, let's just say to the upside, it does 300 because there's a golden cross and there's news and there's a reversal. So if you put all three
Mhm.
together, that's, you could just add it up and just like in your head, just bring it to like 300. Like, I don't know, it's just something after you've done it for, amount of time, you could just maybe just bring this number. But let's just say it does 300 to the top. Then it's met the threshold, like you say, and then we'd expect it to do 150 to the downside. But we might just do 150 or more, like you said. But then, yeah, but it has to always do that, isn't 150 or above. Like it can't do anything below that, right? If
No,
it
no,
does,
no.
let's just say, yeah,
So you
let's
can
just say
say,
that,
you can use the term always in trading. So
yeah,
for me, all that matters is probability, right? Even the thing I just did on Bitcoin, it does not have to go down, but for me, right, ask yourself, what is the probability that this is? So when you say always, so for you to say always, it means you've back tested that, and
yeah, eventually you might do 50, then another 100 up, then come all the way back down and complete. Or is that not right?
it's, well, for me, I don't know. So my question for you is, if you've back tested and it works, then I would say go for it. But for me, I know my, right, even with the crosses indicator, the reason I say it has a 90 to 98% win rate, it's not like if you take each and every sell. No, it's literally if you
Yeah,
do, if you take the first 4 trades, if you do whatever. Now, right, it's not always. So my question
yeah.
for you is, have you back tested that and have you seen that happen? If you have, then I would say go for it. For me, I haven't back tested that, so I really would not be able to answer your question,
I think I know what he's trying to ask. And
Yeah, yeah,
from trading, the answer to me is no, because the market is unpredictable. I was following NAS for a whole week. It was trending up, I don't know, maybe 500, 600 pips, and keep trying to looking for a sell, but getting stopped out. And so I don't know if that answers your question, but you really just got to do your analysis and whatever works best for you, because it's not guaranteed that it's going to drop 600 pips because it went up 600 pips, or
No,
150
no, no, no.
went up
I mean, like,
600.
yeah. What I mean is, like, for example, if we look at like yeah, if we just look at, like, let's just say it makes a big move, like we expect it. For example, when there's a reversal, let's just say we expect like you'd expect 150 pips plus. Like, for example, you'd expect that it could be 300 pips, for example, but then you'd expect it to reverse. Remember, because the threshold has been met. Now, when the threshold is met, you'd expect it to come down for another 150. It might not happen straight away, but it will happen eventually. On gold, that's what I've seen. Like for the past month. I don't know if that's how it happens all the time, but uh, I've seen it for the past month do that. But I don't know if it's been like that for a long time. Or
So
that's
I
how
would
it is.
say if you've seen that, then that's I mean, I don't know how you back tested it, but if you've seen it, then that's right. I'm guessing it
Yeah.
works for you. Because for me, if I'm getting, like, here's an example, right? Look at GJ. You can, and this is on the 1 hour time frame, and even let's go on the 4 hour. GJ can go so far up or so far down. Look at the 4 hour, right? This right here was a perfect reversal right here. What would have happened if you caught this reversal on GJ, right? You would have been in profit about 164, about 50 pips. And then guess what? Came back up, hit your stop loss right there. Enter into this sell, right? You're like, okay, and this is another perfect trend right here. Go up, this one you wouldn't have been even in profit, would have come back to your entry point, go back up and hit stop loss. So what I learn how a pair moves, and then use all these indicators at the same time. Like literally, if you always combine these indicators together, because you see, like how I just mentioned on gold, as much as, and there goes gold, as much as my two top indicators tell me we have a sell, this, right, the breakout indicator to me has like a, I think I said what, 80% win rate, and the crosses indicator has like a 90 to 98% win rate. As much as just even by averaging these two out, any trade that both of them give me, like the US 30 trade will have like if both of these indicators give you a sell or a buy at the same time, that trade has like a 90 to 95% win rate, because you're just averaging the win rates of these two indicators. But right, why did I say this gold trade has like a 70, did I say 70 or 80% win rate and not 95% win rate? Because I'm not just trading just using those two indicators. And keep in mind, right, for me nowadays, when I enter a trade, I look at every indicator that I have. So when I look at the markups indicator, what was gold telling me? Gold was telling me, hey, right here where you're going to get that sell entry, you have an hourly bullish high, hourly bullish low, 30-minute bullish high and low, 15-minute bullish high and low. And if I turn on the zones indicator, we have buyers sitting here. So what this tells me is that despite the fact that my two top indicators are giving me a sell, hey, we have some hourly and 30-minute order blocks there. So my question then to you would be, based on how you've back tested it, it's just not just reversal. Reversal is just one indicator. Reversal actually does not rely on anything else. Reversal is just, the reversal indicator is just my logic that I built in. It does not rely, or it doesn't know whether there are order blocks there, whether they're, yeah, so this reversal indicator does not know whether there are order blocks there or anything. Let's even go here on this markups indicator and go to GJ and see what GJ has. Right, GJ can literally even right now be in a bullish order block, as much as the reversal indicator has been telling us or has been giving sell entries. So right now, and the reason for me right now, I'm in a GJ sell, we have a 4-hour bearish high and low, but literally the reversal can be telling you to sell right here. But guess what? We have maybe a weekly bullish high and low and a monthly bullish high or low. So if you're going to use the reversal indicator, make sure to also use the other indicators in tandem. That way you'll have a high probability trade, if that makes sense.
Yeah, that makes sense. But
Yeah.
for example, if we just go back to, okay, today, like you said, if it does drop, then that would just show like it might still work. But what I've seen, like, for example, last week, I think when he was at 1933, and there was a reversal there. I think last week, and then it dropped, but it only dropped for like 100 pips, and then went up to 1930, and then came down. So from 1933, I know you say you shouldn't use that, and I know it's based off your logic, but I don't know, with gold, it just looks like it works. Like eventually, like it just drops for the 150 every time in that direction.
Did you take the trade?
Yeah. So
Okay.
from 1933 to 110, 20. Yeah, so to 1918. But of course there was a death cross eventually, and then it dropped even more. Of course, like you said, you have to adjust your TP, whatever, but it did drop in that direction. And then, like you said, there was a trend line or whatever. And then it did that. And then it did 300 pips to the top. Like, I know this is all like you have to trial it out yourself to see. But yeah, it does that. I don't know, with gold, it kind of works. Like if you back test it, it looks like it does work. But I still need to test it more just to see like if it really, really like does this all the time. But I've seen this for the last month, it's done this every single time. So,
Yeah, so if that works, then I would say right, the next time, like if you keep seeing that, just go ahead and take it.
Yeah.
Right, because you only need something to work. So like if you have like a 80% win rate, right, you know that there's that 20% that you're gonna lose at some point, right? You can, because if you have a 80% win rate, that means you can literally win 8 back-to-back trades, but you know that, hey, there are 2 trades at some point you're gonna lose. But guess what? If you lose those 2 trades, you're still gonna be net positive. Yeah. So long as you have proper risk management and you have a good risk to reward ratio, if you're winning more than you're losing, that's all that matters.
True.
Yeah.
Yeah.
All right. Any other questions? Let me take this call real quick. Yeah. Any other questions from anyone? All right. Yeah, other than that, yeah, I can talk to you guys tomorrow, but the entry on gold, right? So this would be the entry on gold if this hourly candle, hourly candle closes. What you're looking for to be safe, you're looking for, I already know we have sellers up here. So you can see if I turn on the zones indicator, we have sellers up here. And then we also have this 4-hour bearish high and low. So if you're in a trade, if you're looking to enter a trade, another thing that I do is like, okay, if this trade reverses on me, how far up can it go, right? Because I don't want to get stopped out by a trade and then I'm like, oh, this trade just stopped me out and then went back and hit TP. So you want a stop loss that's wide enough such that if you get stopped out, you're like, hey, this just wasn't meant to be. There's right, and you still, so long as you're using proper risk management, you'll be like, there's really nothing you could have done to avoid that, and it was just part of the trading game. So right here, if you're looking for a stop loss on gold, where would you put the stop? So automatically, the first place I can see, knowing that we have also this hourly bullish high and low, if we do get this entry on gold, you would want your stop loss. The first point would be the previous high, which is around 19. So let me turn off this because we know that we have sellers here. So, and we're looking for sales on gold. So your first stop area would be 1935 area. However, you don't want to put it there exactly because we have a 4-hour bearish high. Like price can literally come up there, stop you out and drop down. Okay, what else do you see if you keep going up? You see a 4-hour bullish low and a daily bearish low. So for me, what I see is stop loss, and this is such a wide stop loss, which for me, this trade is pretty crazy. 1945 area, let me put it that way. Now that's such a wide stop loss because probably this candle closes in the next 18 minutes. So I'm guessing on average, maybe gold will trend, or I'm sorry, consolidate around 1920 area. So having your stop loss at 1945, that's a 250 pip stop loss on gold. For me on gold, I like my stop losses to be 100 pips. So let's say we eventually get a entry there. Right. Yeah, this would be okay. If I really wanted to maintain that, yeah, this might be a tricky one. Yeah, so depending on your stop loss, so first place, because I know some people have a smaller stop loss. So first stop loss above the 9 EMA, second stop loss above the 200 EMA. So even while using a 100 pip, like how I would do it, since I don't really want to hold that high, my stop loss, I would want it to be above this 200 EMA. So probably around 1926, but since we have an hourly bullish high, so maybe 1929 area, that would be a good stop loss. So, and that would be like 100 pip stop loss, yeah. So I would say if you're gonna take the trade, make sure your stop loss is above the 9 EMA or the 200 EMA on the 5-minute. And then maybe 1930 area, 1930 area, 1929 area. So that would be the entry around then. But you have to wait for this hourly candle to close. So that's the only trade I see for today. US 30, for any other sales on US 30, price has to come and close below 34,185. EU, there's really no, you can see EU rejected from this hourly bearish low. And EU is dropping, but I don't see anything to trade for EU. But that's the trades I do see for today. Any last questions? All right, that's pretty, yeah, that's pretty much it for today. I'll see you guys later, or actually tomorrow. All right, bye guys.